Well, it is 1 o'clock, so we're going to go ahead and get started. Wanted to welcome everybody to this is our July crop and livestock outlook. We haven't done one of these online in quite a while, and this may be actually one of the first where we've combined crop and livestock and tried it this way. We are recording this session only for the purpose of putting it out for folks to look at later. It'll go up first on the AMAP website, which is just www.amap.missouri.edu, and then later on it'll get up on the extension website. Since this is the first time we're doing this, there's a little bit more of a process to get it on the extension website. Speakers today will be myself, John Cruz, Marty Foreman, Dave Reinbach, and Scott Brown. Scott will be coming in just a little bit later. And then by way of an agenda, I was just going to do some, first thing, just some quick announcements. As part of what we're doing with this process, we'll be updating these things, these outlooks every month. And we're trying to follow basically within 2 days of when the WASDE report, that's USDA's World Agricultural Outlook Board, releases new estimates every month. And I'm sure many of you are familiar with them. But they typically release somewhere around the 10th or 12th of the month, and then we will try to follow as quickly as we can within 2 to 3 days. The slides will always be available. Marty is working on some kind of a write-up that will give a written summary each month, and we will vary the crops and livestock things covered every month. So with that, you can see the agenda laid out here. We would like to leave a little time for questions, so we hope you'll ask questions towards the end. Otherwise, we will move through things fairly quickly. So the first topic we wanted to start off with was kind of an update on where we're at with the U.S.-China trade war. One of the things that folks often ask me about is, what's really happening to our exports as a result of this. And you can see the black line there is kind of what we exported to China on a monthly basis in 2018 and 19. You can see the May numbers, we ticked up just a little bit, but you can see that we clearly missed our big export window that typically occurs over that October to February period. And so when we look at, though, what happened with our competitors, so I'm just taking Brazil's monthly export numbers here, and you can see that even Brazil, although they did clearly pick up some of what the U.S. lost over that October to February period, even their exports now are showing weakness as we look across March, April, May, and it looks like June may be about on average with where they're at. But part of what is happening here is we think the impact of the African swine fever. And now the other thing I typically look at when I'm trying to assess U.S., Brazil, or assess how much impact China is having, you can see back in the months of June and through November, you can see that gap between the U.S. pork price in Louisiana and the Brazil port price. This particular port is like the second largest port in Brazil. You can see those prices widen out over that period, and they got almost to $2.50, which was effectively about a little bit over the full 25% tariff. And what had actually happened is that Chinese buyers had been instructed not to buy U.S. soybeans, even if the economics worked, so that they could so that if they were crushing the beans, they could still make money with U.S. soybeans. So given that they were specifically instructed not to buy U.S. beans, all of that business went to South America, and you actually started to see towards the end of the period Argentina arbitraging U.S. soybeans. So they were exporting their own soybeans and importing U.S. soybeans. And of course, they also had a drought in Argentina that year that was particularly severe. So they were using U.S. beans to keep their crushing plants running and exporting domestic domestic soybeans. If you look at though now where we are today, as of through the 15th of July, we really haven't seen that gap widen back out. And so the weakness in prices in the market are a reflection of kind of weaker demand relative to the level of supply that's out there. And so if we were really seeing that trade distorting effect come back into play, we'd expect those prices to widen back out. And we haven't seen that recently, even though there's been a lot of posturing in the media. It's sitting there pretty much where they normally, they're trailing together like they normally do. So one of the things we have been worried about is the effect of African swine fever on the overall level of animal production. I think the Chinese came out and made a statement about how much their swine herd has been reduced, 14%. Some of the private sector thinks it's much larger than that. But we are starting to see some impact on feed demand. And that is contributing a little bit to, or at least it's a concern. But right now, at least what USDA is saying is we're only seeing about a 4.3% hit on the soybean meal consumption in China right now. We anticipate that may get considerably larger. The industry thinks that 10% is very conservative, and that number could be as high as 30%, which would be a very big concern if it did reach that level. The other thing that you can see is that China's crush has slowed down in 2018-19 as a result of this, and then there's a bigger concern that you know, as we look at 2019, and I think USDA may be a little optimistic here with what they're projecting for soybean crush for 2019. So if we take a quick look, I didn't want to spend a lot of time with these, but just a snapshot of what happened with planting progress this last year. You can see if we look at Missouri numbers, the black line on this graph shows that, you know, it wasn't the worst year in terms of corn planting, although it kind of got that way by the time we got to June 23rd and June 30th. But initially it didn't start off as that bad of a year. But then if we look at this in the context of the United States, you can see the black line does point to for a U.S. overall being the worst year on record since 1980 at least. Soybeans, Missouri isn't the worst year for soybean planting progress. That's somewhat surprising. But if you look at overall on the U.S. side, it was very close. It kind of very close to the slowest pace we've ever observed. The bigger concern right now is, of course, the condition of the crop that is planted. One of the things you see here, the blue bars are where we are currently, and the red bars are where the 5-year average is. You can see we've got a lot more in that fair and poor condition relative to the 5-year average. If you look, this is kind of taking all of those crop conditions and stacking them together to put them in sort of a context so we can say, okay, are we doing better or are we doing worse? You can see that we're certainly not at the worst year, but we're also quite a bit below the 5-year average and some of the best years. So sitting kind of right in the middle. If you look at that for Missouri, again, the conditions are a little worse, and they haven't really moved a lot over the last several weeks, and so that's a little bit concerning. And we certainly aren't as bad as the worst year, which is 2012, by the way. I don't think I mentioned that. On Missouri soybean conditions, very similar story to corn, except that we're not quite in as bad a shape as corn is. And you can see again, we have too much in the fair and poor condition versus the good and excellent conditions. And then on the U.S. soybean side, again, not as bad as the worst year yet, but still kind of very mediocre in terms of where conditions are setting. Very similar story for Missouri. With that, I'm going to turn to Marty, and he's going to give you the wheat outlook.
Okay, thanks, John. Good afternoon, everybody. I'm going to talk about wheat and spend a few minutes on wheat and then transition into the outlook for corn. But since we're in the, kind of wrapping up a wheat harvest at this point, it's, I think, important that we talk a little bit about it. I think the situation on supply demand for wheat is, a little bit different than the other crops. We're further along in the growing season, and the numbers on the supply side, production, yield, what have you, acreage, are a lot firmer on wheat supply demand than compared to, say, corn and soybeans, of course. The USDA, came out a little bit earlier this month in July, and they updated the winter wheat production estimates, and then they issued the first surveyed estimates for the spring and durum wheat. They upped the winter wheat a little bit, not too dramatic of a change. And the spring and durum also came in pretty close to where the trade was expecting, and also kind of what was implied from the WASDE report from back in June. So I guess the net of all that is that they've got the yield pegged at 50 bushels an acre. And combine all those classes of wheat nationally, 50 bushels an acre. Back on the acres just for a moment. So we've got the wheat acres at 45.6 million acres. I guess I'd just point out that we've been in a real long-term downtrend in wheat production and acreage here in the U.S. And actually, this number is the lowest in 100 years, going back in the USDA database to 1919. So the long-term decline in wheat acres continue. This is probably exacerbated somewhat by the spring weather, but the impact wasn't nearly as severe as what we're expecting to see out of corn and soybeans. So kind of moving down the balance sheet there to the production, 1921. So looking for production to be up about 2% from a year ago. So a small increase in production. As the higher yield kind of offsets a lower acreage. Moving down there to the demand numbers, not big changes there on the domestic consumption. Really, wheat outlook turns mostly on what's the outlook for exports. We've got USDA's got the export number dialed in at 950 million bushels. They actually revised it up slightly from June. But, as you look across there, those numbers, 906, 936, 950 for this year, those are still historically low numbers for wheat exports. So bottom line on the export outlook for the U.S. is that it's improving marginally, but not back to kind of levels that we've seen in the past. A lot stronger, would be something more like 1.2 or 3 billion. It doesn't look like we're anywhere close to that kind of figure this year. The net of it in terms of ending stocks is we're going to drag stock down just a little bit, down close to 1 billion bushels according to USDA forecast, and that lets prices nudge up just a little bit to 520. Mentioned the yield. This is how the historical yield looks for wheat up at 50 bushels an acre. That's slightly above the long-term trend yield on wheat, and it'd be the second highest on record. Just a couple of comments about some of our competitors, the EU and Canada on this table. So we're seeing a bit of a recovery in production year over year, and for the EU, Canada, this would be the same for Ukraine, Russia as well. Now, USDA revised their production estimates down a little bit for a lot of these major producing countries in July compared to June. But if you look at the year-over-year numbers on production, they're actually up there. For the EU, for example, up 5.6 and 5.7 billion bushels, and that's up for what 5% last year. So pretty hefty increases for EU, Canada. Same as a whole for Ukraine and Russia. A result of higher production, looks like their exports from these countries are going to be up a little bit as well. So no lack of competition for the U.S. and the global wheat export market. If we look at where are we with exports now, we were by 5 weeks, I think this data runs through 5 weeks, the marketing year for wheat, and we're running up about 20%, 23%, I think, from year over year on wheat exports, but still down from a few years ago when we had a stronger export base. So if you look out there to the right-hand part of that graph, and USDA's got exports plugged in there at 950 million. So to stay on track, we'll just kind of keep tracking where we are, just below that blue and orange line to wind up out there. Well, I guess you wind up just below the blue line and slightly above last year, which is the yellow line. So about 950 million. So there's some possibilities of some improvement in wheat exports, but I think with the global situation, wheat and global stocks, we're not looking for dramatic or game-changing kind of revisions or improved outlook for wheat exports. Here's ending stocks for wheat here in the U.S. You can see we pulled stocks down a little bit over the last few years, but still historically at a high level, at something like 1 billion bushels carryover. Looking at the price chart, this is December wheat futures in Chicago. You can see we had a high back there in June around 565 or so. We pulled back to about 510 here a few days ago, and then had a little bit of a bounce following the WASDE report last week. Back once again, so we're kind of looking for some support on the chart near term here, and Dave will probably talk more about that in a minute. But looking for some support around 510 or so. I think if that level gives way, we probably pull back to this $4.90, $5 range for the near term. Seasonally, the wheat is under some pressure with harvest still going on. And we're kind of in the second half of harvest for winter wheat. We still have the spring wheat harvest ahead of us. Typically, you have this a little bit of a recovery into Labor Day, and then a pullback with the spring wheat harvest, and then the real seasonal uptick in wheat prices begins from early mid-September, into Thanksgiving or so. So that's what I would look for the wheat market is maybe some further near-term pressure just based on harvest, and then some recovery as we move into fall and sort of early winter period for wheat. Let's transition to the corn outlook. I want to talk about Argentina and Brazil first of all. We've seen a big recovery in their production in both those countries this year. We look at that 2018-19 columns to start with. So that would be the crop that they just harvested or in the process of harvesting in the case of Brazil and their safrinha crop. I think they're about across the halfway mark or so with the harvesting safrinha crop in Brazil, which is about 2/3 or 3/4 of their production down there. So we saw a big recovery in production in both those countries compared to a year ago. Had much better weather, and yields reflect that increase. So we're going to look at larger production and much larger exports. They're kind of at bottom line, looking at the exports at almost 1.4 billion bushels this year for Argentina, and a little over 1.3. Or almost 1.4 billion, I guess, out of Brazil as well. So there's going to be a lot of competition still in the export market. That'll affect, how exports wind up through the summer and the current marketing year, and then also cross over into the 1920 marketing year for corn. Looking out to next year for Argentina and Brazil, looking at a little larger acreage. Yields maybe not quite as strong. Next year, production holds down a little bit. Case of Brazil about steady, and they're still looking at the pretty strong exports again next year. Down just a smidge from what's projected for this year. That might leave a little room for the U.S. to boost exports in 1920, but a lot will depend on, of course, on how that crop turns out next year in South America. The balance sheet for the U.S. So, as I mentioned in wheat, those numbers are pretty firm. Certainly not the case for corn. I think we're going to see a lot of changes in the balance sheet for corn going forward. We had the acreage report came out in June, and it was a pretty big surprise. It was much higher for corn than anybody expected. And so looking for revisions there. USDA is resurveying, I think, most of the Midwestern states here right now, and they'll come out with updated acreage numbers with the August crop report. So I think the trade's probably looking at a number, working with a number on planted acres, probably down more like 87, 88 million acres rather than 91.7 million. Prior to the acreage report, some were talking in numbers all the way down in the low 80s for planted acres. We may have taken those really low numbers out of the equation, but I certainly think the 3 or 4 million down here is it could be unexpected. In terms of the yield, USDA's got 166 bushels plugged in at the trade, probably thinking close to 160 at this point, 160, 162, something like that. All the condition ratings are not terribly good at predicting the yield at this point in the season. They would imply something a little less than 166 as well, more like those low 160s for the national yield. And I think that's also predicated on pretty good weather going forward here for the rest of the summer. If we run into some further weather problems, that yield could drop off a lot sharply, certainly. We're in the middle of a heat wave right now, and looks like the heat's going to stick around through or into the weekend anyway. The latest forecasts call for below normal temperatures next week in the 6 to 10 day and the 8 to 14 day. So currently the forecast is for this heat wave to subside and cooler temperatures moving back in by next week. They also have, though, a below normal precip forecast for next week. So we'll have to keep an eye on this weather forecast. If if the heat or the cool phase doesn't last long, we move back to warmer temperatures again. I think we'll see the market respond pretty quickly to that. And weather, of course, the next 3 or 4 weeks is going to be very important for what that final yield is going to be. So with that, we're probably looking at pretty big changes on the supply side here. I think if you plug in an 87 million acres and 162 bushel yield, probably looking at production down around 12.8 billion, something like 1 billion bushels lower than what the USDA's got there. So it's clearly that would affect ending stocks, but down closer to 1 billion carry out or less, and your stocks use down well below 10%, 8 or 9%. So we'll have to see. That August crop report. We'll talk about it next month. Will be pretty key to kind of revamping people's expectations. In terms of exports, the corn exports have been tracking kind of below the level that USDA had forecast back in June, and so they revised their export projection in the WASDE this month down 100 million. So put things a little more on track with that forecast. And it's some risk, I think, that we may not even reach the 2.1 billion number. Corn yield, we talked quite a bit about this already, but the trend yield is more like 176 or so. It was like USDA had plugged into their balance sheet back in May when they first did a trend yield estimate for 2019. 166 is below trend, but it's not like the 2012 or going back to even into the 80s with the 1980 or 83 or 88 type droughts. So right now, just a modest reduction below trend. As I mentioned, I think the current indexes in the trade are probably looking something closer to 160. Ending stocks, projections, right around 2 billion bushels carryover on corn. I think that's likely to see that. We'll likely see that number come down a lot closer to 1 billion than 2 billion final analysis. One thing I did was take a look at some years when you had subpar yield. So I think the threshold for that was about a 7% reduction from the previous record yield for corn. So with that being the case, you find about a dozen years or so since 1980 that was the case. And wanted to compare, when did the December futures contract make its high, relative to all the other years when you didn't have a subpar yield. And what it's really kind of points to is those red bars kind of skews the seasonal rather than so having a price high in the spring or in June. In this case, it shows that green bar at 8 of those 8 years out of those more favorable yield years that made a high in June, and so they're skewed towards the first half of the year when you normally expect a high. However, when you run these years with weather problems and subpar yields, it tends to skew sort of turns the seasonal on its head, I guess, and we push the timing for highs out into the second half of the year, which would be those red bars. At one in April, but most of them are coming out of those 12 years out in July, August, September, or even November. So I think that it kind of argues for not getting too bearish on the market. Still a lot of uncertainty ahead for the corn market, and with this yield already in some trouble, I think I think you point toward later on sort of September time frame for a high in the corn market. The December futures, we had a setback here after the high early this summer down to about 420. Prices snapped back on the WASDE report and then have settled back down a little bit here of late. I think if we break below that 420 on the downside, we're probably headed down into that 420 to $4 area on this chart. I think we'll probably, my expectations that we do break down. I'm not sure that we will, but if we do, I think we'd hold $4. I think we got too much uncertainty in the market fundamentally going forward to expect prices to break down much sharper than that. And if you run into any weather problems, I think we'll retest the highs and maybe exceed them. Just depends on how the weather unfolds over the next 30, 60 days or so. And even once we get past the summer weather, with the lateness of the crop, we still have the risk of frost damaging the crop, as we move into harvest time. So with that, I'm going to turn it back over to John and talk about soybeans.
Okay, on the soybean side, we have on the SMU, I guess the first thing I'd pick up, the first number I'd point to is the area planted estimate of 80 million acres. That is a very low number, actually, and there is a lot of permitted plantings out there. I made the drive from here to Champaign, Illinois last week, and there are a lot of fields that are not planted, particularly on the Missouri side, but even a few over on the Illinois side. The other question that I kind of have about the projections for next year already is the export number. That probably assumes that we get part of that China market back. It probably also is a bit optimistic relative to all the other things that are going on over there, especially the African swine fever. When we look at ending stocks, though, both from a global perspective, the U.S. is carrying a record level of ending stocks, and this is weighing on prices in the market. We've gotten a little bit of an upward tick in soybean prices. There may be a major movement as we get the new report out in August, somewhere around the 10th or 11th or wherever, when WASDE comes out. Watch that period of time, because that will be a time when the market is likely to move based on what the actual numbers say versus expectations. So the point is that there's probably less optimism for soybean prices unless we just show up with a really low planted number. The other thing, though, that may help us a little bit on the price side will be what happens with yields. And so that's just something to kind of keep in mind, that whether that 48.5 estimate in bushels per acre is going to hold, or whether it's going to be somewhat lower than that. If we look though how we did year to date on accumulated soybean exports, as you can see, we are, you know, below all the other years that are on this graph, and a big portion of that is China. You can see a flat period there in January. That's actually when the USDA offices were closed, and so they didn't collect any data during that period. So that flat period didn't really probably occur. It just was when USDA did not report any additional or new updates on the data. If you look at China then, how did we come out at the end of the year? We probably will reach 600 million bushels. That's roughly, you know, somewhere between 40 or 50 and 60% of normal, or what we would normally expect to export to China. So they did end up buying some U.S. soybeans, and of course, we'll see what unfolds with the various trade negotiations that are going forward, but we're still nowhere close to where they used to be. And you can see it perhaps in this graph. If you look at year-to-date accumulation of exports, you can see how you know how much they are down. But you can also see that if you look at other countries like the European Union and Mexico that did increase somewhat, that increase was not nearly enough to offset the loss in of the Chinese market. The soybeans, as we look at Argentina and Brazil, remember the 2018-19 crop is the crop that they're in the process, or that they just harvested, and the 2019-20 crop will be what they plant here beginning in September. So if you look year over year, you can see both the Argentina and Brazil, that both Argentina and Brazil are expecting to increase their area next year, about 2.5% or so. And that's also stacked on top of an increase in corn area. So again, responding to markets and very much looking to expand their production. One of the things, though, that happened this last year is they had, of course, an exceptional yield for soybeans in Argentina. And so you can see as you return to a trend yield, it is a lower yield, and so that ultimately gives you a little bit lower production. On the Brazilian side, you can see, though, that we're bouncing back up to a trend yield, and so that gives them another boost, and so you end up with you know, about a 5% increase in soybean production in Brazil. And so the heat is going to continue for U.S. exports, even if we get back to normal trade relations with China. We still are going to have a lot of competition, and that competition perhaps is a little bit stronger than it was before this all started. If we look at soybean futures, then you can see they've been bouncing up and down here in the last really 6 weeks. A lot of that is going to continue until we know what exactly is going to happen with crop area. And of course, crop conditions, if things get hot and dry and we go into a period like that and yields start to get hit, that might give us some upward support for that. But remember, there's a lot of soybeans out there in the market. And so if anything, I would be cautious to watch that these prices don't slip back down. If I still was holding soybeans, I'd be thinking an awful lot about pricing at least most of 50 to 70% of them before we slip back down into the potential of an 830 or 820 price range. With that, I'm going to turn it over to David and let him take you through the technical analysis side.
All right, I guess it's working. I hope everybody can hear me okay. Yeah, I think John and Marty, y'all did a great job. I appreciate it. In some ways, not a whole lot I could add to it. I'll just sort of give you sort of my ideas, the technicals. I thought y'all bring some real good points about some of the seasonals and things like that. I guess what I'm going to just talk a little bit about is just some of the things I'm looking at, and just maybe a few things that folks, farmers, some of your ag business folks, whoever, maybe just things to sort of look at the charts. I like to use candlestick charts. To me, they're a little more visual. They sort of tell a little bit of a story. You can see around, what was about May 13th, and I should have circled it on this December corn map. Maybe you can see me, I don't know, right there. We sort of took off. They call that a doji hammer, two doji hammers. Actually, you can call it a bullish engulfing gap up. A lot of terminologies, a lot of this technical stuff. Sometimes you can look back in hindsight and see things a little bit better. But you can see we've been in a pretty nice trend for about a month. And most trends last about 4 to 6 weeks. And we pretty well lasted that 4 to 6 weeks until we peaked about like June 15th or so. But what I'm sort of showing there a little bit, and again, it's sort of, like I said, I like to look at more visual, is they're trying to tell me a story. You always heard of head and shoulders tops, head and shoulders formations. You can see the left shoulder. I think sort of a gold one right there around 455. This is December corn. Then you have the head at 470, then that 465. We sort of backed off yesterday and we're down a little bit today on the chart from the day. And then you sort of draw a neckline. If you sort of look at this 375. Now I'm not saying we're going down to 375. I'm just sort of pointing that out as I was actually listening to one of the marketing services one time mention that thing. Because I always say in marketing, I always put 3 things you've heard me say: weather, China, commodity funds. And commodity funds are going to run it a lot, and they're using technicals to sort of look at it. So what I see here is a couple of things. Number one, looks like we're sort of in a topping formation till we get more information. I think John and Marty sort of pointed out, or Marty pointed out in the corn, how many acres we got planted, what's the condition. I know here in southeast Missouri that we've got corn to get planted. Corn is all over the board in what the condition. Overall, it looks pretty decent, but it's late. We're going to be harvesting corn way into October, probably maybe November, who knows. We've had a lot of water, and we had like 2 to 5 inches this past couple of days. So a lot of corn standing in water. The Ohio River, Carroll finally went below flood stage this week, first time in about 4 or 5 months. Crops don't like wet feet normally. They lost some nitrogen. It's really going to be I don't know. I think John and Marty both alluded to, we may not know a lot of what's going on until after harvest. I think Marty showed that one excellent slide showing him sort of when you get production down, how in November you sort of see a peak. And I wouldn't be surprised. I think it's what happened in 93 flood year. If you look below, I put a RSI. There's RSIs. There's all kinds of momentum indicators I like to watch. And a lot of times what I like more than anything is there's some kind of divergence. Like the market's making a low, but the momentum indicators are going the opposite way. You can see we made that low in May. Some of the momentum indicators were actually going higher, which sort of says, hey, maybe something's going on. Now look at what's happening this summer. We're sort of the opposite. We put a high in, the momentum indicator RSI put an 80, which is usually overbought. And then what happened? Made a new high. But what happened? The momentum indicator didn't make a new high. So another little bit of reverse. So it gives you some things sort of watch. I didn't put it on there. If you look at the next, if I sort of look at, unless this weather really changes, we may have just been a trading range. Look at that green 50-day moving average. That's what a lot of probably commodity funds are watching, is a 50-day moving average. And that blue line's a 200-day. I don't care if it's the stock market or if it's probably any commodity funds, or they're probably looking at the 50 and the 200-day moving. It's pretty common. There's also a 20-day. I don't have it on there. That red line is sort of, I like to look at the 10-day. That's a 10-day exponential. Puts a little more weight on the front days, and sort of when it breaks that sort of a short-term signal, hey, maybe we're going to break a little lower. I could see it trading between that 425, 470, and maybe even go down all the way down that blue line to 200 and 405. I think Marty sort of alluded to that. I can't disagree with that. Oh yeah, we may even do that, especially if the weather. What the weather's doing. It's supposed to get hot this week here in southeast Missouri. It's supposed to have a little break, but we'll sort of see how the weather goes. I'll throw this out for a little humor. I was talking to some farmers this morning, and one of them said, yeah, my neighbor who's a farmer said the cicadas are starting to chirp early or whatever. He said, that means we're having an early frost. I throw that as information. We'll see the cicadas know anything. But if that is, then all bets are off what this market could do. Right now, looking at the weekly continuation, I think about 517 is the next high. Then after that, who knows where it goes to. I'm looking at it right now from my side, and I think, gosh, it could run anywhere. It could run up to 6 or better. Who knows? Let me see if I can go to the next chart. There it goes. There's November. Sort of the same thing. We took up there in May. We've sort of made that high. You can actually probably call that another head and shoulders top if you want to. I didn't draw it this time. I did show a little trend line underneath it. If you break that, we filled that one gap. There's another gap down at about 860. If you look on the weekly chart, 970, 1060 are your next sort of your price target. You can look at it, but you can sort of see the market. I thought I sort of circled a morning star. That's what a lot of candlestick traders look at. We sort of did that. We sort of put a doji gap up, and then we sort of look at that. It's called a morning star. I know the beans southeast here look terrible. I think it's late, small, flooded out. You know, a lot of early beans. If this was mid-May instead of mid-July, hey, that's okay, but it's mid-July. Beans just coming out of the ground. Like I said, we got 2 to 5 inches of rain, probably more than that. Some guys make it 6, who knows. I don't know, this bean market, to me, the beans look pretty rough down here, I think. So, and I'm sure across the country. And that's probably, we could start, you know, depends on what happens weather-wise. You know, August usually makes the bean market, and I think it'll probably the case here. So I don't see, like I think Marty and John both said, I don't see a lot of big breaks in these markets, at least right now, unless there's just some weather just really gets very, very favorable. So that's what I'm sort of looking at the November market. The next one I'm going to show in the wheat, and I just use I use a weekly chart, and more than anything, I did that. If you look at corn, beans, and wheat, it looks just like that. For since about 2015, we've just been going sideways, and now we're sort of bumping up to the top end of the top end of that sideways trading range. Since the 2012 drought, we sort of ratcheted all the way down to about 2015. In the last 4 or 5 years now, we've just been sort of going sideways. And if you look at July, 560, the next would be 620. I know Marty mentioned wheat acres being down at the lowest in 100 years. We don't grow a lot of wheat. Wheat acres southeast have been going down. We call it the landlord's crop. The landlords like it because they get a wheat crop and they get a soybean double crop. Wheat yields were all over the board. I know on my parents' farm where we were down a third due to the, I think, just wet feet on our wheat. But I heard other farmers telling me he had about 70 plus 80 bushel wheat, and he had some high sand, so all over the board on wheat there. But I don't know if there'll be a lot of drop off in wheat. You know, maybe that $5 level, probably the next level there, 620 will be high. That's what my next chart is. Cotton, probably not a lot of cotton producers, but the thing I wanted to sort of point out there, I got, if you look at 1819, you see that plant acres are 14 million acres of cotton, and you got the harvested at 10. That's quite a spread, about 4 million acres not harvested. That's Texas. Iowa, Illinois make the corn market. Texas makes the cotton. Cotton peaked about 94 cents last year, and now it's down in the 60s. And it just shows what happens when you have a short year, short crop, or potential, how the market peaks early, builds up that risk, and then just continues ratcheting lower. And we're seeing that. You look at cotton ending stocks went from 4.3 to 5.1, and now we're showing almost a 7. And you look at that harvest planted. Look how narrow it is. Why? Texas has a good crop. Looks like they don't have a lot of abandonment. So I know there's not a lot of cotton people probably listening, but that's just something I sort of watch for. Again, John Robbins at Texas A&M is probably the expert in cotton. He's the one I sort of rely on to get information when it comes to cotton. I think I got a cotton chart here. Yeah, as you can see, look at what happened this spring with 78 cents. And I was telling guys, the numbers are saying you better be pricing this cotton somewhere. Now we're down to 65. Now we're really falling at 63 cents. And so, yeah, 56 cents. I put on there. That's the next chart support, I guess, using the weekly chart. So a lot of cotton got planted. Well, here in Southeast Missouri, I think a lot more cotton got planted, and we'll see what happens. The next one is rice. Rice acres, when we planted almost 2.7 million acres, not a lot of rice acres comparatively. So a few 100,000 acres difference will make a big difference. But the big thing there is ending stocks are going down. And actually, it's probably got the most bullish chart right now because we're back at the top of the range around $12. The next point on cotton rice, I think on the continuation chart is about 13, support around 11.20. So I would say right now, for the rice producer, contact your mill, contact who your buyer is, see what your basis is. You may want to do a little marketing there on the rice. I think that's my last slide. Yeah. Now I'll give it back to whoever.
Let's see. Am I good?
Yep.
So good afternoon, everyone. Now that David told us we're going to have an early frost, it's changed my entire livestock forecast. So I appreciate that, David. That was news to me today. So I want to spend just a little bit of time talking about current markets. We'll look a little bit at WASDE from a livestock perspective. If I start with fed cattle markets, really when we've looked at 2019 cash cattle prices, they've tracked very nicely relative to where we were a year ago at this time. So not a lot of additional decline. I keep saying in cattle markets, demand has been relatively good. We're actually seeing maybe a little less of a production increase for this year than we would have thought earlier. But we don't want to forget those are far cry from the record prices that we would have seen back in 2014. And I always say it's harder for folks to see these lower prices on the way down than when they saw them on the way up back in 2012, 2013. But it's been another reasonable year on fed cattle side of things. If I look at calf prices for a minute, and I kind of maybe have a little bit of caution here, we've certainly seen for the last several weeks that we've been running about $10 below where we were a year ago at this time in terms of 4- and 5-weight calves. I don't know what the guys think on the corn side of the equation in terms of which way they hedge their bet about risk, but I guess I'll jump in to say I'm more worried about higher corn prices as we end the year, driving feeder cattle prices lower than lower corn prices driving feeder cattle prices higher. So as we think about our producers that are spring calvers that are going to be selling some calves here in the fall, more downside risk setting here than we've seen for a while. I say that and I go, yet those feeder cattle prices have not been all that different than where we were a year ago at this time. On hogs, so it's been a tale of two stories, I think, so far this year. If you look at the 2019 line there for a minute, first 3 months of the year, I think the discussion was so focused on just the increase in domestic supplies of pork and hogs to the marketplace that we talked about hog prices that were $20 a hundred below where we were a year ago. And then about March, the stories started coming out about just how bad African swine fever was going to be in China. And we added 25 to $30 in a heartbeat to cash hog prices. I think markets got a little hot at the time relative to the news that we knew out of China. And as such, we've kind of seen now hog prices come back where we were a year ago at this time. I guess don't discount the opportunity for hog prices to move much higher later in the year. To me, the issue is going to be one of just what happens when some of the supposed stocks of pork that are on hand in China are dwindled to the point that they're going to have an interest in more pork from some other countries. If the Chinese decide they're going to import a lot of pork, I don't frankly care if it's from the US or other countries. That could certainly drive hog prices late in the year. The flip side of that, if they don't demand a lot of pork later in the year, we've got a lot of domestic supplies of pork on the market. We could certainly see that last quarter of this year prices that $15 or so below where we were a year ago, which will make it very tough for producers here in the U.S. if that plays out. I wish I knew with certainty which one of those alternatives end up. But if we have very low hog prices, then and we produce a lot less corn than USDA currently estimates, I think it gets tough in a hurry for our livestock producers. All right, so just year-to-date change. So January through May, you've got production and then net trade for the different commodities here. I just want to make the point that don't forget we're growing supplies of all these meat products. If you look at beef production, January through May of this year relative to the 2013 to 2017 average, it's almost another billion pounds. It's a little more than 1.3 billion pounds of growth in pork. It's about 1.5 billion pounds growth in chicken production. So don't forget we have that supply side situation that's unfolding. Yes, we're getting some additional help on the trade side generally. However, when you look at beef and pork both, relative to last year, January through May is actually below in terms of exports. So we're in a situation where we haven't seen the same growth this year relative to 18 that we've seen for a number of years in a row. To me, suggesting maybe a little more pressure on prices to move lower than prices to move higher. So what USDA give us out of the July WASDE? Not a lot of change relative to where June was on the livestock side. I guess I keep pointing out that if you look at production of the beef, pork, chicken, and other meat, 104.1 billion pounds, another 2 billion pound increase. That goes on about 3 or 4 years running of fairly hefty increases in production. And USDA says yet again in 2020 we'll expand another 1.4 billion pounds. I don't disagree with that path out of USDA, but just reminding us that it's more and more supplies. I think if you look at the export side, we aren't exporting all of the additional production that comes on. When you see it's going from 16.8 in 2018 to 17.4 in 2019. If I go back for just a minute, so the one thing that did stick out, USDA raised 19 pork production by about 450 million pounds, as I recall, relative to June. That translates into, on this slide, 52.3 pounds per capita. That's a lot of pork to deal with in this country. And so I don't want us to forget about that revision that's already happening when we're halfway through the year almost in terms of livestock numbers. If you look at the price side, these are USDA's 2019 projections for fed cattle and hogs all the way back in May of 2018. So in May of 2018, they said we're going to have $117.50 fed cattle prices. As we got earlier into this year, they actually were raising those. We got them to add another $2. But in the last 3 reports now, we're back down to $115.50 for U.S. average. Just tells you there's more drag on cattle prices relative to where they kind of started. You see on hogs the same thing of that March through May period got pretty gosh darn hot in terms of markets expecting big things to happen as a result of China, and they've slowly been backing off of those. Now, don't read too much into the absolute changes there. The scales on both sides of that graph are relatively narrow, so I don't want to read too much there. Last one I have is for milk, which, by the way, for those of you wondering why there's no line through there, just don't forget the government shut down. Don't be trying to compare the left hand to the right hand side here. USDA has been raising milk prices. We've come out of a pretty tough period of time. But now USDA is saying, we're close to 18 and a quarter for a 2019 calendar year average milk price projection. That's a heck of a lot better than the $17 we were talking about for much of 2018. So, but better news there. I guess I just kind of close for a minute on the policy front. Don't forget to tell our dairy producers in this state to talk about the signing up for the dairy margin coverage program that's currently open, I believe, through mid-September. It is the most no-brainer policy choice that we've had to make for a while for them. They at least should take $9.50 on their first 5 million pounds of production history for 2019. It will maximize the dollars they get, regardless of what happens the rest of the way through the year. So with that, I'm going to turn it back over to John.
All right, thank you guys for listening. We have a little